Hello and welcome to San Diego Market Watch, where we bring you timely, accurate information about the real estate market in San Diego. Today is March 23rd, 2023. We are just about in the last week of March here. March is kind of a long month, so a week from today we'll still be talking about March. But we are drawing toward the end of the first quarter of 2023, and real estate has been a bit of a wild ride so far this year. We had a lot of activity in January for sure, although as I've been talking about for the past few weeks, inventory has been going down every week, with the exception of one minor blip up right here on March 8th. It's been going down every week since the middle of November, and this week is no exception. We are down below 2,200 units now, and the number of new listings is up just a tiny bit from last week, but not even close to where it was back at the beginning of the month and back here at the beginning of February, and then of course back here in January. So you can see we've had a couple of peaks of new listings, but look what's been going on with pending sales ever since the early part of January. They have been outpacing new listings, and now even closed sales are outpacing new listings this week. So new listings are sorely needed here in this market. And, now is a really good time to start thinking about putting that home on the market, because this condition that we've got right now with few homes for sale, more pendings than new listings, and interest rates also sinking just a little bit. It's just a good combination heading into spring. If you've got a home to sell in 2023, this might be your big chance. A lot of experts are talking about, even collapsing housing prices later this year. I'm not here to make any bold predictions like that. All I'm here to do is tell you what's happening right now and whether right now is a good time or not. And if you're a seller, right now is a great time. It's not a terrible time if you're a buyer, if you can find a house that you want to buy, because rates have improved just a little bit. They're down again this week. They were down last week. They're down again this week. 6.42 on average. And when it's going to be really difficult to negotiate a seller buy down right now, although not impossible if you've got a good buyer's agent like myself. But 6.42, when you can negotiate a seller buy down, is within striking distance of an interest rate in the fours. So that is good. And 6.42 is not phenomenal relative to where rates were, back here, but it's better than where they were right here. So, and the other thing about your rate is, once you're in, and you've got a 30-year fixed mortgage, and then when rates improve some more in the future, you can refinance. Refinance is a really powerful tool that homeowners can use as rates decline. And, people might argue with me on this point, but I really believe that refinance it's good for the economy overall, because it allows people to free up money that they were otherwise putting into the mortgage. It creates jobs for the lending and escrow and title industry. And then when you have that extra spending cash, it goes into the economy in the form of home improvements and consumer spending and all sorts of other stuff. So as rates decline, and I'm just kind of assuming they're going to stay on this declining trajectory, because that's what a lot of experts are saying, I believe they will. I believe we are going to be looking at rates below 6 by summertime. I hope I'm right about that. And then, of course, if you're lucky enough to earn enough money to qualify for a 15-year fixed mortgage, you can get a little bit better here at 5.68. But this is, last year, rates were really driving the bus in terms of what was happening in the market. But this year, right now, what really seems to be driving the bus is the number of homes for sale and the lack of new listings relative to pending sales. This is keeping prices strong. And as you can see, we talked about this last week. This is not a new number because this is a monthly chart here. But as we talked about last week, we had a definite flattening out of median price and then an increase in January and a bigger increase in February. And I believe that this increase is going to continue just a little bit when the March data comes out. We're not seeing the median price increases that we saw last year, of course, because last year we had low inventory, few new listings combined with hyper low mortgage rates, and that was just creating a frenzy. So median price was going nuts. I believe we're going to see a modest increase in median price when the March data comes out at the beginning of April, but nothing like we saw last year. Of course, I could be wrong. Maybe it goes nuts again before it crashes. Who knows? Maybe it doesn't crash. Maybe it does. Nobody can really tell you. But just based on what's happening on the ground right now, I can tell you that I really do believe we're going to see roughly 1.1 to 1.4% increase in median price when the March data comes out. So that's what's happening in San Diego real estate this week. If you like what you're seeing here, please remember to like, share, subscribe, comment. We love your comments, good or bad. We'll respond. And if you get testy, we might block you, but that's just how it is. We don't want to get into big arguments with folks, but we certainly enjoy any kind of friendly debate that you might want to have. Anyway, that's what's going on, and we will be back next week with more neighborhood real estate update and another edition of San Diego Market Watch. If you want to have some fun, stop by tomorrow evening around 6 o'clock. We will be live on Facebook with our Friday live show, where we will recap a bit of this Market Watch and look at some cat videos and some other interesting stuff that's going on around San Diego. Stop by, have a drink with us. We love to have people come in live. And then, of course, if you want to watch later, that's always cool too. So that's it for now. Have a great weekend if I don't see you tomorrow, and we will talk to you very soon.